Hi, welcome to the Arizona Real Estate Radio Show. I'm Brent Bankston here with Nick Mowry, and this week we're going to talk to you about purchasing tax liens in the state of Arizona. Most of the time people think there's only one way to purchase a tax lien, and that's at an auction. But what we're going to discuss today is that there's a second way that a lot of people don't know about, and the benefits and the negatives to purchasing those tax liens in that second way. First and foremost, though, let's go ahead and hear from Nick a little bit and have him introduce himself about what we're going to talk about.
All right, Brent. So like Brent was saying, most of the time when people think about purchasing tax liens, they're looking at buying them over at the auction. That's how they've been taught. So the idea is you go down to the auction and you're bidding down percentage or return, the return you're going to get. So when you're down there, the bidding starts at 16% and people are bidding down, and whoever has the lowest bid is going to be the winner of that tax lien. And typically bids are kind of going right now around 2 to 3% because it's pretty hot down at the auction. And sometimes even zero if people really want to get the property. So they're probably looking to foreclose on it at that time.
So when you're at the auction, you're buying the tax lien for a specific year. Do they sell multiple years at a time at an auction, or is it just a 1 year?
So it's typically 1 year. I think the only time that they're selling them multiple years is if the lien's been sitting on the market for a long time. Like, let's say down in Sierra Vista, Cochise County, if there was a specific lien that's been gone to the auction, hasn't sold, gone to the auction, hasn't sold, you have to buy all the years in order to get that lien.
Okay, and that's the auction method. So you're purchasing at the auction, you're bidding on the interest rate of return on that investment that you're getting, and if it gets redeemed, let's talk about that. What does that mean when something's redeemed?
So when a property gets redeemed, it means that the homeowner has, or some other lien holder on the property, whoever has interest in the property, has paid off the tax lien, in which case then you get back your money and interest that's due to you. So if you had the property for whatever period of time you had it for, if you were getting 16% on your money, you'll get your money back plus the 16%, less any fees, of course.
That's the ideal situation, getting 16% from the auction. So the second way that we purchase, and this is the way Nick and I actually go out and purchase tax liens, we currently go over the counter. So after the auction's all done, there's still properties left that haven't been bought. Now remember and think about this, there's reasons they weren't bought at the auction. There's reasons people aren't investing in these. Rather they didn't know about it, they took a look at it, didn't take a look at it. But these are the tax liens that Nick and I are looking at, and these are called over the counter. So Nick, can you tell me the process of over the counter?
Okay, so we came up with 5 typical steps that you're going to want to go through when you're purchasing over-the-counter tax liens. Yep. Okay, so and this, in most cases, when you're buying over-the-counter, in my opinion, you're probably looking to foreclose on the property. It's a property that you want to acquire so you can sell it at a later date. So the first thing you're going to want to do when you're looking to purchase an over-the-counter tax lien is check out the year that you're going to be buying. So right now in Arizona, in order to foreclose on a property, you need to buy tax liens that are at least 3 years old, right?
Right, correct.
So the year we're looking for right now is anything less than 2014. Is that correct, Brent?
2014 or older.
Right.
So as long as you can buy that, yes.
And the other thing you want to look at is how much money is that tax lien. So if you're looking at liens that are $1,000, $2,000, they're most likely going to get redeemed. Most people aren't going to lose their house for $2,000. Of course, it all depends on where you're buying this tax lien, because like in a lot of the outskirt counties of Arizona, $3,000, $4,000, $5,000 is a lot of money for them, and they may lose their house for $5,000, which we've seen happen before.
Yes, we have.
On the other hand, here in Maricopa County, you're probably looking for liens that are probably $15,000 or more, and that would be difficult for most people to pay off.
You figure if they can't pay their taxes, their credit's pretty bad, so there's not a situation where they're going to be able to refinance a house or develop that cash flow to go ahead and pay you off so that you're not losing your house. So it's a good investment.
All right, the next thing you want to do, once you've determined that you've got the right year, that you found one that's got a decent amount of money on it, so it's going to be harder for the homeowner to pay off, you're going to want to check out and see if there's any other liens on this property besides the tax lien.
And how do you go about doing that? What's the first step?
So a great step, the way of doing it is to go down to a title company and ask them to pull, what is it called, a prelim, Brent?
A preliminary title report or a limited title report.
So you're going to want to pull that, or if you're friends with somebody down at the title company, they can obviously just tell you, hey, there is another lien on this property, such as like an IRS lien, which is what you want to look for. Because what you have to realize is a tax lien is a number one position. The only thing that can trump a tax lien is an IRS lien.
Correct, an IRS lien.
So once you have a tax lien, I mean, you're over the mortgage. Now, don't get me wrong. If there's a mortgage on it, most likely the mortgage will pay it off. The bank will pay it off. They're not going to lose the house for.
No, they're not going to lose the house. Chances are, yeah, if there's a mortgage on the property, they're going to come and pay you off once you start foreclosure because they're not going to give up, depending on the size of that mortgage and who the company's with. But, those are things that you want to look into, and that's why we're talking about it, is you want to find out what you're going to have to foreclose on and notify in the action of foreclosure. So anybody who has a right and or entitlement to that property will be notified in the process of the foreclosure.
Right. So going back to that, you want to check and see if there's any other liens on the property. So again, you're looking for IRS liens. You probably don't want to have any mortgages on it because they're probably going to pay it off. So stay away from those properties. You want properties with no liens on them. That's going to be your best case scenario besides your tax lien. So next step is going to be, which we found out to be something to look for, is call the city. Most people don't think about this, but contact the city and find out, is there a condemnation on this property? Are they going to tear it down? Right? I mean, you don't want to get the property right away and find out it's going to be torn down. The other thing is, are there any fines or any immediate enforcement actions on this property that you're going to have to take care of once you own it? I mean, that could be expensive.
It can be very expensive. And from personal experience that Nick and I have been involved with, if you got the opportunity to view the property, do it. And then always do the research with the city and or the county to find out what they're currently doing or actions they're taking on the property. As we've seen, some cities have gone in and taken over properties from tax liens simply because they're trying to clean up the neighborhoods. And if you're in a situation where you're buying a tax lien, you may be limited on the amount of time you have to foreclose before the city steps in and takes it over from you.
Right. Or once you do own it, there might be, hey, clean this thing up quick, or we're going to tear it down or do whatever. I mean, we've experienced these things, so we're definitely letting you guys know how it works.
Yeah.
Like Brent said, the next thing you ultimately want to do is research the property. So it's not, obviously go take a look at the property, but also have an agent or a realtor comp the property for you so you know what the real value is. I mean, we've run across times where we're like, hey, we're buying a tax lien for $2,500. How can we lose our money? You can sell, what property can't you sell for $2,500? But there are properties out there that you cannot sell for $2,500 and nobody wants them because they're that bad.
Well, yeah, we've experienced that with a mobile home that doesn't have running water or electricity. It's basically a standing urinal.
Yeah.
But you still get the lot in the overall aspect of it. You still get the land, and somebody might be interested in the land. But definitely do your research. I mean, we're here talking to you because we've done some of these, and we're continuing to do them because there's a lot of opportunity out there, and really rewarding rewards or earnings. So we just want to share what we've learned and hope that we can help you out making good investments.
All right, so the last thing you're going to want to do is research the homeowner. So it doesn't seem like something you would normally do when you're going to buy a property, but you want to find out, do these people have the means to pay out this lien? So one of the properties, for example, that we've purchased in the past, we're looking and the people have passed away. So these people obviously don't have an opportunity to pay off the tax lien. So the odds of getting it are very good unless there's an heir that we can find that is willing to pay this off if they find that it's worth it. And in most cases that we've been doing these, we have not found somebody to come forward to pay these off. So we've had good luck with, as long as you're looking for the right thing, like the person is either passed away or they're in some sort of financial hardship, these are things you want to look for when you're purchasing the ideal tax lien to foreclose on.
Now, Nick, that we've talked about the ways to buy them and the research that we want to do, what are the steps in the process of now we've bought the tax lien, we've notified the attorneys, we have the attorneys working on it. How long does that typically take?
Well, Brent, when we were first doing this, I told you it was going to take us 6 months to do these things. Now, that's not the case at all. When you're doing these, I think you want to give yourself a year and a half, most likely. I think that's a good time frame to feel like, hey, we're going to get this property and it's going to take a year and a half. It's not that the procedure itself takes long. Like if you look at the procedure itself, it's 6 months about to complete.
Yep.
But there's things that can hold this up, such as they can't find the person to
notification of the
notice.
foreclosure. Yep.
So finding the person and noticing them properly is probably one of the most difficult things that you can do. And because a lot of these people are hiding, so you got you got to be able to notice them in order to get the property and be able to sell it later. You have to do all the proper legal procedures.
Typically, there's a reason their property's in tax lien foreclosure, and they owe the money. They're hiding for some sort of reason. After those 18 months and you secure the property and you've received your judgment for foreclosure and you get the tax deed, what is the next step in the process?
Well, ultimately, the next step in the process is so you've gotten, are you saying you've gotten the paper?
We've gotten the tax deed.
So you're going to have to wait. You're going to have to wait until you can get a special warranty deed on the property, because that's what you're going to ultimately end up doing, correct? The special warranty deed is the next step. So in other words, you're going to have to wait at least, what did we find out, 6 months?
6 months.
So you're going to have to wait at least 6 months before you can sell this property, most likely. And that was something we weren't really expecting to when we first started.
Correct.
So you plan on renting the property and then after the 6 months fix it up and sell it if that's what you want to do. But what you're going to end up issuing is a special warranty deed, which means that it warrants the property from the time that you obtained it forward.
Yep. Until the time you sell it.
Correct.
So that's the process of purchasing a tax lien and the different ways of doing it, not only over the counter but through the auction. Nick, why don't you share a little bit? We've got one property together that we're doing okay on. Why don't you tell us about the property on Cypress?
Okay, so this particular property, I think we obtained the tax lien about 2 years ago, and it was one of the first ones that we purchased. When we bought this particular tax lien, we did do the research pretty much as we're telling you right now. So let's go over that a little bit. So the first thing we did is we made sure we had the right year, which we did, okay? Then we also looked at how much money we were getting on it. And this particular lien was $3,500, which is not a lot of money, but in this particular area, it is. And then it was $1,500 for us to foreclose on it, which is very inexpensive. That would typically be about $3,000.
Right.
So figure we were all in on this property for $5,000. And so we were pretty excited. This is a mobile home. It is a single wide. It's not like an amazing property or anything, but again, we were excited because it was our first one. So we checked it out. We had the right year, and we were into it for $5,000. The next thing we had to do was we checked to see if there's any other liens on it. In this case, there was not. So we were good there. We didn't call the city, but we did research the background on this property. And we found that it did have HOA liens on it, but that was something we were not really concerned about because we know that when you foreclose on a property, it's going to wipe out any of the other liens. So that was something we were not going to pay. In this case, these HOA liens were about $2,600. Is that
Correct.
right?
Yes.
So it would have been pretty expensive for us to have to pay that off. And the last thing we did was research the homeowner. So in this case, when we were researching the homeowners, we found that these homeowners had passed away. So we didn't have to worry about them paying it off. So ultimately, it went pretty smooth. The only hard part about this one was there were errors, and we were trying to notify all the errors, and whether we were notifying the right people or not, that was the concern at the time. Now, we did notify anybody with that last name or anybody that could have been related to them, but we definitely notified more people than we had to, which is what you want to do, so that way you obtain the property properly.
Legally. Correct. So at this time, right now, what we went ahead and did was we renovated the property, and we put a tenant into it. So it's currently rented. So we now own a single wide
Correct?
trailer
Yep.
with a tenant. We'll recoup our costs in just over 2 years for the total investment, including renovation costs. And after that, we've got the property free and clear where we're earning income. And that's really why we got into this, is to make money. I'm assuming that's why you guys, if you're listening to this, would want to get into it, is to make money. Now, we've tested the waters on some smaller properties, and now we're working our way into some bigger properties. But I think that's our future next endeavor, is we're going to be looking for more residential things in Maricopa County. Is that correct?
Yeah, that's what we're going to be looking at. And again, this is one of the ways. So, you can go ahead and look at properties that are going to the auction. We've got properties that are over the counter, and we have also learned other ways to acquire these properties, which we can talk about at a later time. And so when you're thinking about tax liens, don't think you just have to go to the auction. There's many options to acquire tax liens. That is only one of the ways, and the most popular way, obviously, is going to the auction. But over the counter is really a great way to purchase them too. You just got to be more careful, and you have to research the property that you're looking to get.
Nick, on the bottom, if you're watching this online, on the bottom is going to be a contact number or an email address to ask any questions regarding tax liens. Is that correct?
Yeah, we'll give you guys information if you have any questions about tax liens. Feel free to reach out to us. We'd be happy to help you out or answer any questions. So.
Hey, thanks for listening today. Like we said, reach out to us if you have any questions, and we'll be coming back in another week with another topic about Arizona Real Estate Radio.
All right, guys. Thanks a lot for watching, and have a great day.